Are VA loans assumable? Did you know that one of the unique benefits of a VA loan is that it's assumable? That means a qualified buyer can take over an existing VA mortgage, including the original interest rate and monthly payment. In today's market, that can be a game changer. Let's break it down. A VA loan assumption allows a buyer to take over the terms of a VA loan that a seller already has in place. So instead of applying for a brand new loan, the buyer steps into the existing one, and that includes the rate, balance, and the payment schedule. It's a way to potentially lock in and lower monthly costs, especially if rates have gone up since the original loan was secured. Now, here's the part that many people don't realize. You don't have to be a veteran to assume a VA loan. As long as you meet the lender's financial requirements, such as credit score and income, you could be eligible. So how does it work? First, you'll need to find a home with an assumable VA loan. Your real estate agent can help you track these down, especially through MLS listings. Once you find the one, get the details on the loan, like the interest rate, the remaining balance, so that you can compare it to what you might get with a new mortgage. Then make an offer that includes a contingency for assuming the loan. From there, you'll submit the paperwork to the lender with things like your income verification and bank statements. The lender will review everything, and if you're approved, you take over the loan. There are some key requirements to keep in mind. The buyer needs to qualify financially, and there's typically a 0.5% funding fee involved, unless you're exempt due to a service-related disability. Well, what about the seller? If the buyer is another eligible veteran, the seller can restore their full VA entitlement, freeing them up to use those benefits again. But if the buyer isn't a veteran, the original entitlement stays tied to that property until the loan is paid off or refinanced. That could limit future VA loan use for the seller. And don't forget the release of liability. This is an important step for the sellers. It makes sure that once the loan is transferred, that you're no longer responsible if something goes wrong. In order to do this, the buyer must formally agree to take on the loan, and the VA has to approve it. Let's talk pros and cons. On the plus side, assuming a VA loan means cost savings, lower interest rates, and no need for an entirely new loan process. It's even open for non-veterans, which can make your home more marketable as a seller. But on the flip side, the process does take time. Approval isn't guaranteed, and sellers should be cautious, especially if their entitlement is on the line or they're not released from the loan. So the question is it worth it? That depends on your goals. Whether you're buying or selling, it's important to work with a knowledgeable loan officer who can guide you through the steps, explain the options to you, and make sure that you're covered from start to finish. Here at Direct Mortgage Loans, we're here to help you navigate every part of the VA loan process, including assumptions. Reach out to us today. Let's talk about what's possible for you.